Good day, class. Good day, everyone. So in today's class lesson, I'm going to be showing all of you how to be able to form high probability trade setup in using higher time frame PDRA key levels that are respected in an algorithmic order flow. So this is not, I'm not trying to call price here. I'm just trying to do a kind of go back in time and explain how would you behave assuming before price move at hand to deliver future price. Like, how will you see how to narrate price action before they truly deliver? So now here is V101S. So I'll be using V101S to anticipate what made price to behave and do what it did exactly. So in this class lesson, I want you guys to pay attention to my own point of view of how I see and internalize synthetic indices price action using ICT algorithmic trading concept. So with that being said, so let's jump into our class lesson now. So this is the V101S. So we are on the monthly time frame, and I did a little for those that are into my private mentorship class. I sent a post, or will I just say a chart? I sent a chart that before price delivered at hand, I already told them where the price wanted to go. So I caught future price before it happened. So I told them to watch it, and I told them to explain what needs to be done, or what is the algorithm trying to do, rather not what needs to be done. So I caught future price from the monthly time frame, and I showed it to my private mentorship group section. So now here is the V100. I'm zooming in. So what V101 is? So what do we see? Firstly, we know that we are bearish from the higher time frame. Do you see what price is doing? This price is making a lower high. It's not willing to come up. So failure swing here. Eyes not taking themselves. So this is where we were when this price action began to deliver towards to the downside. So we are still expecting that price will reach our objective. So now I'm going to be doing a little back test on this. So now what do we see over here? Let me zoom in so you guys can see properly. Now we saw that the monthly is bearish. We know the order flow is bearish on monthly time frame. Now we have a fair value gap here, right? If I put this, there's a fair value gap somewhere here, right? That's a CB, fair value gap CB, which was respected at its consequent encroachment, right? So we have, before price started moving, you have to establish the order flow, the algorithmic order flow. We know it's bearish, so price is going down. So now we have to now work with the PDRAs. So now on this PDRA we have fair value gap. This is the PC. Now what did the market do into it? Market went into that CB, filled it, and this become a balanced price range, right? The wicks overlap this inefficiency. So this is a balanced price range. So if price comes back to it, we should see this place act as true resistant, or true resistant, or generate weakness to keep pushing price down. Now it happened here, and when this one happened, keep going down. So now the main threshold, the consequent encroachment of this will be here. And what else do we see again? Now we know price going up to come down. Now we have some key levels at discount. The key levels at discount will be this. Look, what is this? Down close candle. We have 4 monthly consecutive down close candle that was traded through into this monthly CB at discount level, at premium level. So these are discount. So we have what? Another block, right? So another block is here. So that other block, sorry, this is the open of the other block. So we have the other block, the bullish other block that was traded through. So this level, we still work with the highs, but I said I focus more on the opening price of that other block and the main threshold. So the main threshold of the other block with there. So we have these levels. So let me just delineate these levels so that you guys can be able to see it very well and properly, so we can go down to a lower time frame and see, or let's cycle down to time frame to see why this price action was delivering. So this should be my draw on liquidity. I'm targeting price to come down into this bullish opening price of its other block. So I will delineate that now shortly. You guys will see it. So let me do that now. Alright guys, so here is it. We have the opening price. This is the main threshold. Now this is the consequent encroachment of that CB. Look how the market once respected it here, then a balanced price range over here. So to me, this is like a smart money reversal. There's a smart money reversal here. Take out the highs over here, then market keep falling down. So here has been completed. So now it's coming down to test this bullish order block, and let's see if this will hold. But before that, all of that, let's cycle and look at the narrative. Now there's something I would like to say here. You see, when you want to define bias, we already defined the bias is bearish, right? So if you want to define bias and narrative, which with using higher time frame PDRA as your compass. So the PDRAs we are going to be using are this fair value gap, the other blocks. So there's fair value gap at discount, at premium. Can you see? There's fair value gap that was respected at the premium market, and there's now the discount order block, the bullish order block that is found inside of the discount market. So we want to be seeing what is likely to happen when price gravitates towards these levels, these higher time frame levels. So now what I want to say is that when defining your bias and narrative, I want you guys to take note of this. When you are defining your bias or the algorithm's bias and narrative using higher time frame PDRA as your compass, we want to be having this at the back of our mind. And what is that? I'll list, or I'll just give you a point of view what I have on my mind. So if I'm the one, what I do is that I have this specific rule that if the algorithm is drawn to an higher time frame premium array, then the algorithm's bias will be hunting for bullish setup in all lower time frame algorithmic order flow for long positions. But if the algorithm is drawn to an higher time frame discount array like this one, the algorithm is drawn to an higher time frame discount array, and discount array, what do we have? We have an order block, a bullish monthly order block at discount market. So if the algorithm is drawn to an higher time frame discount array, then the algorithm's bias will be hunting for bearish bearish what setups in all lower time frame short for shorting position that you will take around this key level that was respected, this premium key level that was respected, down towards this. This is, you want to be using the high, the opening price, and the mean threshold. So I already have this high on my eyes. You have to not neglect the higher time frame key levels. Don't just paint up your chart with lower time frame, mixing them up. Let your higher time frame key levels be on your chart, so that whenever they are respected or gravitated to, like this one respected, you know that the higher time frame has given you the green light. Here you will find high probability trade setup when you cycle down to lower time frame being formed. So that is what I want to do now by going back in time. So now let's because why am I saying this to you all? You know why I'm saying this? Is because it's very important to spend more time learning where the market is likely to go or reach for as the next draw on liquidity, which will make you a better trader, instead of learning entry techniques. It's not entry. I'm not teaching entry techniques. There are many ways to enter the market using those PDRAs, which you all are used to. But the thing I want to stress out here is that reading price and trading price, they are two different things. Before you trade, you must learn how to read price. That's why reading price focus on you anticipating where the next draw on liquidity is, and it is what I have said earlier on that you will use as your jam, or use as your what am I going to use for it? You are going to use these things as concept. You are going to use all what I've said earlier on as a concept, as a guide, as a roadmap for you to know where is the algorithm trying to drive price, or is willing to drive price to a particular draw on liquidity, which is this discount PDRA on the monthly time frame, which is the bullish order block. So let's continue. So now if we cycle down to a weekly time frame, what do we see? I might as well take this off. Oops. What do you see? So now on the weekly time frame, this is the extended line of that monthly bullish order block. So mind these lines I used over here. So now look at what market did. Here that was a week, was on the monthly, was not a week on the weekly. It was actually a candle. It was a bearish order block that was traded through by this last up close candle. Now this is where you will know that this market is coming down. High probability trades, high probability order blocks will always form near an higher time frame key level. The last down close candle or last up close candle that forms inside an higher time frame key level is a high probability order block, not just the fair value gap. That's not what really makes it. There are many criteria that makes a high probability order block based on how ICT has taught many of us, or taught me. So look at this one. Look at the last down close candle forming inside of that higher time frame key level. Do you see what now happened? See how price moved higher. See how price moved high. So it's like that. Do you see that? This inside of the weekly, this candle, this one, this down multiple candles that was traded through, or let's start from this candle, because this candle engulfed this, right? So this candle down to all this candle traded through over here. The body is what I'm looking at. The body was traded through. So the wicks sometimes are not really, they are not as important as the body. So now when this happened, this become a high probability bullish order block. So if you take that other block, it still forms inside of this. Now you have not extended this out, so you don't know whether these lines will not be the line I extended will not be extended on the monthly if I haven't seen this. Rather, I would have been using this one as my bullish order block on the weekly, and it formed over there. So we can't really say for this because this has not materialized when they were forming, except we use something else. So let's proceed for that. What do you see on this your weekly chart over here? We are not focusing down here, over here. So what do you see next? So I will show it to you now. So now on the weekly time frame, we have an inversion fair value gap. Why are we having this inversion fair value gap? This was a fair value gap, right? That was traded through. Already this is becoming to me like a, or let me just leave that for now, let me not say it. So we have a fair value gap traded through, the market tapped into that fair value gap and inversion. Because it tapped into an higher time frame key level, it didn't have any room to go higher. Stopped, came down. Look at how the wicks, let me zoom in so you guys can see. Look at how these wicks, the consequent encroachment of this CB was what I extended out. So when fair value gaps are broken, they are traded through, they become an inversion fair value gap, which is what we are seeing over here. So they can be reclaimed and inverted multiple times depending on how the narrative goes on the price. So here was a bearish order block, this last upwards candle. So these three candles traded through this last upwards candle. So we have a bearish order block forming inside of an higher time frame, a monthly CB consequent encroachment level. Do you see that? That's powerful. So this is a powerful sign for you to know that this market is coming down, because the monthly on the discount, the monthly premium array rather, has tell us or given us the green light. So now if you want to pick trades here, your target will be this weekly inversion fair value gap, which was the CB that was traded through. Instead of it to push price down, it was traded through, so it becomes an inversion fair value gap. So now let's go down and cycle down to the daily time frame. So look at the daily time frame. What do you see? Look at that. See it? This is that other block that I was talking about. Then market traded through that other block, which we can see over here. This is the other block. So we don't, around this last up close candle here should be the main threshold. And what do we see? Market tapped into it and respected the main threshold of this other block. So we want to be seeing lower price into this monthly discount array. So let's go to the daily time frame, and this is the daily. What do you see? We have a fair value gap CB, extend it in time. You see something, extend that in time, right? Then what else again? We have a fair value gap here. You see, inside of this key level, this white line is your monthly CB consequent encroachment. All these are wicks on the month, wicks, not body like this. The wicks on the monthly are bodies now on the daily. So you should take note of that. Now look at what happened. The market tapped into this fair value gap CB and moved down, created a CB, came back, filled it completely. This is a balanced price range because it was closed completely. This isn't yet balanced, it just closed it a little, so here stayed open. So this fair value gap was open. Now I told you that fair value gaps can stay open, they can be balanced sometimes completely 100%, sometimes 50%, 70%, 60, as even as low as 20%. So this should be like 20% balance of that fair value gap over here. So we have this on our chart. So let me just as well really let me just kind of let me just put the my own chart markups on it. So this is just a rough sketch of my markups, so you guys can be able to see it properly. Alright, so now here's my annotation. This is exactly what I did when I was trading this pair. So I did trade it, just that I just want to explain what I did when I was trading it. Let me zoom in closer so you guys can see better. Now this is what I did. So this is the fair value gap, daily CB, and this is one. So I took a trade here because I knew this was a weekly what. No, I told you that this was a weekly order block, so it was traded through like normal order block. Then it came into to test the consequent the main threshold of that order block. I didn't delineate. I won't want to waste too much of time. I want this chart to be clean as possible, so you guys should bear with me that this weekly over here, this last upwards candle was my target. So I had to do a little bit of anatomy on this where I want to be taking my trade setup. So I did an anatomy of this candle because I know this was traded through, then anatomy, then came into this area. So the consequent encroachment, the 50%, was not traded through by a body candle close. Why? Because I trusted that this monthly consequent the main threshold 50% of this weekly bearish order block was not traded through, because these three candles made this last of those candles became a bearish order block, and we saw its main threshold respected inside of the monthly consequent encroachment, which is the 50% of that CB. So let's cycle down to, so that here you should be seeing high probability trade setup when you cycle down to time frame as like the 4 hours, right? So let's go to the daily time frames. There's no way too much of our time. So this is how I was scaling them. So I have another fair value gap, but this was the consequent encroachment. Let me zoom further. Look at how this was respected, the consequent encroachment. Here's another entry. When I understood this, that this has been a balanced price range, so it continue pressing lower, fair value gap, extend the consequent encroachment on your daily and see what you get around here. So you'll be able to pick trade setups from here. All this didn't happen in one day, mind you. Please, this blue line is the inversion fair value gap. So when I was taking trades here, my aim is at this inversion fair value gap, which was the CB on the weekly time frame I showed to you guys earlier on. So I was aiming for this, but I didn't hold price. I'm not that kind of trader that holds price. I trade with time and all those kind of a thing. So I have different ways of framing my own trading model, high probability trade setup for my own style of trading using ICT concept. So I can decide to be a day trader, I can decide to use Q zones while day trading, or I can use the data ranges, the higher time frame, the algorithms monthly data ranges, and I like to use that too to see, especially on the daily time frame. So now what do we have on this daily time frame? Guys, look closely again before you have the confidence that this market is going to come in here. What do we have? We have a high, a low, a higher high. Guys, take note of the body before the wicks. Is the body showing you that high? Now I'm anticipating, what I'm trying to tell you is that I'm anticipating a breaker block. a bearish breakout block. So we have a high, low, high body, low body, higher body, and then market trade through broke this low or the body. But we classify both. But once the body has been broken, there's a change in the state of delivery. But if it stretch and expand towards this low here, then we can leave the market to, we can now say that's our bearish breakout block. Now we have a fair value gap inside of it. Look at what happened. Market retrace. The last down close candle. So I'm using this last these two candles. I'm using these two candles. So these two candles, extend it in time. Well, I want to be seeing the consequence, the mean threshold of that candle. Although it's weak and come back, but we didn't close by a body candle, so it respected it. So this is a bearish breakout block. Look at that. It's a bearish breakout. Here, a high, a low, a higher high, and then a low, and the market came back and continue going down. So you can see that on your line chart. So that's it. So now let's go to the 4 hours and see what was going on in the 4 hours. So cycling down to 4 hours charts and look at the 4 hours charts. So look at the 4 hours chart. Even on the 4 hours chart, look at that, beautiful. We have what? A breakout block again. A bearish breakout. We have a high, a low, a higher high, body. I'm looking at the body. A higher body, a low body, a higher high body, then a low. The market break structure. So the higher high tapped into this daily CB. Now, do you see the magic? 4 hours algorithm respecting daily higher time frame. 4 hours is a lower time frame. So the 4 hour lower time frame algorithm or PDRA respecting the daily PDRA key level. Look at it. Tap in there and just came down. So when it's coming down, you can, inside of this monthly CB key level, do you see that? This is not a coincidence. Look at where this stopped, and I took my trades from here all it down towards this drawn liquidity. I'm already in profit when I did this. So I didn't really expect. I'm not trying to sugarcoat, aiming that it's a must I get to this weekly inversion fair value gap. It's not a must. It might get there, or it might stop like this exactly and just retrace back. So you should not be anticipating that it's a must. Your price action, your calling on price action beforehand must get here, but you already know it's going here. So I took profit away from, well, after I've taken these liquidities, I took my profit, close for the day. So I just want to watch whether it do what I wanted to do. Since it didn't do it, it came back up again. So this is another opportunity. So I saw that, so we have inside of that breakout. So inside of that breakout, we have a balanced price range over here. A balanced price range that was traded through in this side. So here was an inversion fair value gap. If we extend the mean consequent encroachment of this CB on the 4 hours, you will get entry here. But I'm not going to cycle down to lower time frame like 1 hour, because I don't want this class tutorial lesson to be too long. So we have a bearish breaker on the 4 hours. Market trade aggressively to take out these sell side liquidities. We have equal lows. Look at that, equal lows, and we have relative equal lows. These equal lows are targets. So whenever there's equal lows, the algorithm we want to take them, and once that's taking these equal lows, you see it's returned back. Although we still have more equal lows resting on that inversion fair value gap on the weekly. So it took this and wanted to clear them off. Then the market went up and created this. So inversion fair value gap. And what do we have here again? Another block. Last up close candle being traded through a bullish order block, and the market came into that CB. This is a CB of the daily time frame. So all these are like weeks. So here was a balanced price range, other block balance price range into this fair value gap CB on the daily. Market went aggressively to take out this stop. Then here was a gap. Market filled it, and look at what was happening here. And market went down lower to take out this inversion fair value gap. They draw liquidity and sales are resting over there. So I hope this was insightful to all of you. So this is how you frame high probability trade setup from higher time frame to lower time frame. So the 4 hours is where you should stop when you are trying to look for entries. Now the 4 hours, when you see that the higher time frame key level is being respected on the 4 hours, and 4 hours key level 2 is respecting because it wants to follow the order flow of the higher time frame, then you can cycle down to your lower time frame like the 1 hour, 30 minutes, 15 minutes and 5 minutes to take your entries only at the respected key levels, which are PN for all, which is doing a kind of offset accumulation to distribution. Offset accumulation and distribution is what has happened here. So we have this buying, offset distribution, offset accumulation, and selling downward into this drawn liquidity, which is the inversion weekly the weekly inversion fair value gap, the IVG, selling down. So this is accumulation and distribution. So this is the theory behind offset and offset accumulation and distribution towards the drawn liquidity over here. So this is how the algorithm does its two main job. So this is one of the two main job is doing, creating inefficiency and pairing of offset accumulation and distribution. So that is the two main job of the algorithm, which we saw the algorithm doing over here. So that will be it for now. So I don't want to take much of our time. I hope this was insightful to you all. So until next time, I'll catch you guys on another class lesson. Then take care and bye.